We live in this incredibly fast-paced world where when you need something, you often need it, like right now.
Absolutely. Patience isn't always an option, is it?
Exactly. And that's so true for personal finance. Technology has just completely changed the game, even for things like loans.
Yeah, things that used to involve appointments and paperwork.
Right. So imagine this. You're in a bit of a tight spot. You need cash, and fast. What if you could get it without even leaving your couch?
That's a powerful proposition.
It really is. So today we're doing a deep dive into Tambadana. It's a specific online cash loan app that's definitely making its presence felt in Malaysia.
Okay, Tambadana, got it.
Our source material for this is pretty solid excerpts from a piece called Tambadana, Malaysia's online cash loan app.
Yeah.
It really breaks down what it is, how it works.
And the important stuff to watch out for, I assume.
Exactly, the crucial considerations. So our mission today is to unpack this digital lending platform. We'll look at its features, the company behind it, and really equip you, our listener, with what you need to know when you're looking at these kinds of fast online loans.
So it's using Tambadana as a case study, essentially.
Precisely. It's about understanding this whole landscape through a real-world example.
Makes sense. Let's get into it.
Okay, let's unpack it then. So fundamentally, Tambadana is a mobile app. It's developed by a company called Wawasan Kajaya SDM BHD.
Wawasan Kajaya SDM BHD.
Okay, and it's specifically for offering online personal loans in Malaysia. The key thing here is it's a digital platform. No physical offices, no queues.
All through the phone.
All through the phone. Now, the loan details, they offer amounts from RM500 up to RM10,000, so a decent range for smaller needs.
Right. Not huge sums, but potentially very useful.
And they really push this idea of rapid processing. They claim quick approval, quick disbursement, sometimes within minutes.
Within minutes. That sounds incredibly fast.
It does, doesn't it? And you have to wonder, does that speed come with maybe a hidden cost or some trade-off people might miss if they're in a rush?
It absolutely can. And that's a really important question right off the bat. That speed is attractive, no doubt, but often it means, maybe less in-depth checks compared to a traditional bank loan.
Okay.
And lenders usually balance that higher risk by charging higher interest rates or adding extra fees. It's sort of the price of speed and convenience.
Right, the risk premium.
Exactly. And Tambadana really is a prime example of this larger trend. Financial services moving totally online. It offers huge convenience, huge accessibility.
Especially for their target audience, right? Who are they aiming for?
Yeah, the source says residents of Peninsular Malaysia, they need to be employed, aged between 20 and 60, and have a valid address. It's a group that often needs quick, smaller loans and might find traditional banking a bit cumbersome.
So it fills a gap, but potentially at a higher cost.
That's the dynamic, yes. It democratizes access in a way, but you need to be aware of the full financial picture.
Okay, so if you're in that target group and thinking about it, what's the actual process like? How do you apply?
Walk us through the user journey.
Well, first step, obviously, download the Tambadana app. Then you fill out the application form inside the app, your personal details.
Standard stuff.
Free standard. And you need to provide a photo of your MyCard. That's the Malaysian ID card.
Okay, so ID verification happens via photo upload.
Yes, and that ties into the tech they use. They mention EKYC.
Electronic Know Your Customer.
Right. And also OTP, one-time passwords for verification. Seems pretty standard for secure apps these days.
It is, and it's actually quite crucial. Using EKYC and OTP helps build trust online. It's about verifying you are who you say you are digitally. It helps cut down on fraud.
Makes sense. So once you submit all that,
what happens next?
The system apparently processes the application automatically. Then you get an SMS telling you the outcome approved or not.
An SMS notification. Quick feedback.
Yeah. And if you are approved, the funds get transferred to your bank account shortly after, according to the source. It sounds incredibly smooth, maybe almost too smooth.
Well, it's designed to be smooth. That's the whole point.
Mm-hmm.
And that EKYC and OTP process we mentioned, it's significant. It's that layer of security trying to make sure the transaction is legitimate, even though it's all virtual.
Right.
But stepping back a bit, there's a really key aspect here. These are unsecured loans.
Meaning no collateral needed?
Exactly. You don't need to pledge your car or house or anything valuable. You don't even need someone to guarantee the loan for you as long as you meet their criteria.
That sounds like a big plus for a lot of people.
It is a huge draw.
Yeah.
But, and this is the crucial trade-off, because the lender has no collateral to fall back on if you default, they're taking on more risk.
Okay, and how do they usually handle that increased risk?
Typically, through higher interest rates and potentially more fees. That's the standard way they compensate. Higher risk generally means higher cost to the borrower. It's a fundamental part of lending.
Got it. Risk equals cost. So that leads us perfectly into the next part, which is, where it gets really important for anyone thinking about this. The actual terms, the costs, the commitments.
The fine print.
Definitely the fine print. First off, the loan term. It can be as short as just 1 month or stretch out up to 12 months.
So some flexibility there.
Some flexibility. Now, the interest rate. The source is very clear. It's a fixed annual interest rate of 18%.
18% per year. Oh,
But like you mentioned, that's probably not the whole story, is it? There are other fees involved.
almost always.
Yeah, they list stamp duty, processing fees, attestation fees, even credit report fees. And of course, if you're late with a payment, there are late payment fees too.
Right, so that 18% is just the starting point.
It seems like it. It's the headline rate, but not the total cost.
Precisely. And this is where you, as a borrower, really have to pay attention. You absolutely must look beyond just that 18% figure.
Because the fees add up.
They can add up significantly. While 18% annual interest is, as the source notes, relatively high, especially for quick, unsecured loans like these, it's those other charges, the stamp duty, the processing, the attestation that can sometimes cash people out.
How so?
Well, they can effectively push the actual cost of borrowing much higher than just 18%. Think of them as almost like a hidden interest component.
Can you give us an example, maybe?
Sure. Let's say, hypothetically, you borrow RM 1,000 for 3 months. The 18% annual interest works out to about RM 45 for that period.
Okay.
But then let's say the various fees, processing, stamp duty, whatever, add up to another RM 100 up front, which isn't unrealistic for some platforms.
Right.
Suddenly, for that RM 1,000 loan, you're not repaying RM 1,045. You're repaying RM 1,145. That's effectively a 14.5% cost just for 3 months. If you annualize that, it's way, way higher than the stated 18%.
Wow, okay. That really highlights why you need to know all the numbers up front, not just the interest rate.
Absolutely critical. It's about understanding the total repayment amount, not just the advertised rate.
That example makes it crystal clear. So, okay, we've talked about the process, the costs. But who is this company, Wawasan Kajaya SDN BHD, that's running Tambadana? What's their background?
Yeah, that's important too. Who are you actually dealing with? And the key thing here, which the source highlights, is that they are a licensed moneylender in Malaysia.
Licensed. What does that mean exactly?
It means they're not just some app developer who decided to offer loans. They operate under the authority and, importantly, the oversight of Malaysia's Ministry of Housing and Local Government, known as KPKT.
Ah, KPKT. They regulate moneylenders there.
That's right. And the source even gives the specific license details. License number WL664-6140-153-01125, and it's valid until November 30, 2025. They also have an advertising permit.
Okay, so they're registered, regulated, they have the official paperwork.
Correct. These details confirm they're a legitimate legal entity operating within Malaysia's financial regulations. This isn't trivial. It's quite fundamental.
So what does that licensing, that regulation by KPKT actually mean for you, the person borrowing the money? Does it mean you're getting a good deal? Or just that it's legal? What's the real difference compared to borrowing from someone less official?
That's a really smart question. It means they have legal and credible standing. That's the main thing. It immediately sets them apart from, say, unlicensed or illegal lenders, the alongs, as they're known in Malaysia, who operate completely outside the law and can use really predatory tactics.
Right, so it avoids the really dangerous operators.
Yes. Now, the KPKT license doesn't guarantee you'll get the lowest interest rate or the best possible terms, but it does mean the company has to follow certain rules. There are regulations they must adhere to.
So there's some level of consumer protection.
Exactly. There's a framework, a level of consumer protection, and importantly, a path for recourse if something goes wrong. You know you're dealing with a recognized company, subject to government oversight, not some shadowy operation. It provides a crucial layer of confidence.
That distinction is definitely key. Okay, let's pivot slightly to other really critical things potential users need to think about. First one, data security. Always a big concern these days.
Huge concern. And rightly so. Now, the Tambadana app developers claim data is encrypted in transit. They also say no data is shared with third parties.
Okay, those sound like good security practices.
They are important assurances, but you also need to be aware that the app does collect quite a bit of data. It's not just your name and phone number.
What kind of data?
It can include things like your location, information about your device, and obviously all the personal information needed for the ID check and the loan assessment itself.
Yeah.
It's pretty comprehensive.
Right, which they need for the loan decision, presumably.
Yes, but it's still a lot of your personal data held by the app. Now, the good news, according to the source, is that you can request to have your data deleted.
Oh, that's interesting. You can ask for it to be removed.
You can ask. But this brings up that broader issue of digital privacy, doesn't it? What does deleted truly mean? While you can request it, it's probably wise to assume some anonymized or aggregated data might still be kept for their own analysis or maybe regulatory reasons.
So deleted might not mean completely vanished forever.
Potentially not entirely. It just means you, as the user, need to be really mindful about your digital footprint and what data you're comfortable sharing, even with the option to request deletion later.
That trade-off between getting the service and sharing your data is always there, isn't it?
Always.
Okay, and let's circle back one more time to that 18% interest rate and all those fees we talked about. Just from a cautionary standpoint, if someone's considering this, what's the most practical thing they can do to really understand what they'll owe? And are there any specific red flags they should look out for?
Yeah, absolutely. Beyond just reading all the terms, which is essential, the most practical thing, do a simple calculation yourself.
Like the one you did earlier.
Exactly. Ask for a complete breakdown of every single fee and charge before you agree to anything. Then map it out. How much is each repayment? How much goes to interest? How much to fees? How much actually reduces the principal loan amount?
So create your own little repayment schedule.
Precisely. If you can't clearly see how that works, if the total repayment seems confusingly high compared to the loan amount and stated interest, that's a major red flag. Transparency is key.
Makes sense.
And the other critical piece is, honestly, assessing your own ability to repay. With an 18% rate plus fees, missing payments can get very expensive very quickly because of late penalties. It can snowball.
Right.
So responsible borrowing here means really knowing you can comfortably fit those repayments into your budget. Don't let the attraction of quick cash now overshadow the reality of paying it back later, potentially with significant extra costs.
That's really sound advice. Okay, so just to recap our deep dive today, we've looked closely at Tambadana as a real-world example of these online personal loan apps in Malaysia. We've explored how it works, the terms involved, the company's legal status.
And those crucial things you really need to weigh up.
Exactly.
Yeah, I think the key takeaways are pretty clear. The convenience and speed of platforms like this, undeniable. They offer immediate access to funds, which can be incredibly helpful for many people, especially those maybe not well served by traditional banks.
Right.
But it comes with really important strings attached. You've got potentially higher interest rates, you've got those various fees that can significantly inflate the total cost, and you have the ongoing considerations about your personal data, how it's collected, how it's used, how it's protected.
And the licensing.
The licensing from KPKT provides that important layer of legitimacy and regulation. It tells you they're operating legally. But at the end of the day, it doesn't replace the need for your own due diligence. Understanding every charge, assessing if you can truly afford the repayments, that responsibility lies squarely with you, the borrower.
So it really comes down to being an informed consumer.
Absolutely.
And maybe that leads us to a final thought for you to ponder as we wrap up. Consider this balance. Immediate financial access on one hand versus the full cost, not just the money, but also your personal data on the other. How does that tension shape the choices we make in this digital age? How do we, as people needing or wanting these services, weigh that instant gratification, that immediate solution, against the longer-term implications for our financial health and our privacy? It's a question that's only going to get more relevant as tech keeps reshaping finance.
It certainly is. Lots to think about there.